Did you know that nearly 80,000 Belgians are actively considering leaving the country? And no, it's not because they don't love their waffles. It's because once they earn just 46,000 euros, over half their hard-earned income simply vanishes to the government. And most people think escaping Belgium's tax trap is as simple as booking a flight to Dubai, but the Belgian tax authorities are some of the sharpest in Europe. And they've seen every trick I can tell you in the book. What you're about to discover could save you hundreds of thousands of euros or cost you everything if you get it wrong. And thousands of founders just like you have made the move, and we've helped them do it the right way. Hi, I'm Arturo from Amifast, but before you pack your bags, you need to understand exactly what you're walking into. And most Belgians who try to leave get absolutely crushed by three things. Exit taxes that can hit you with a, for example, 300k bill on profits you've never even touched. Residency traps that keep you paying Belgian taxes even after you've moved abroad. And compliance nightmares that can literally freeze your assets for months. Let me show you exactly how to avoid these disasters and actually succeed in your Belgium exit. What's really happening to successful Belgians right now? Well, you're getting demolished from every angle. Personal income tax kicks in at a brutal 25% and climbs almost to 50%. So that's literally half of your income gone before you even think about building wealth. Your company pays corporate tax, and then when you take dividends, you again get hit with additional personal tax. Double taxation at its finest. Add wealth taxes, regional taxes, social contributions, and by the time you've paid everything, you're looking at effective rates that would make most international entrepreneurs immediately start shopping for plane tickets now. So here's a real example from one of our clients. A successful tech consultant in Brussels making, let's say, 400k annually, and after all taxes, he was keeping roughly 200k. So that's literally 50% effective rate before we even consider the opportunity cost of keeping that money locked in Belgium. But the psychological toll is worse than the financial one. You're constantly stressed about new tax increases, worried about wealth tax assessments, frustrated that your income is being threatened as a problem to solve rather than a contribution to celebrate. So this is exactly why 20% of successful Belgians are now seriously considering relocation. Not because they hate Belgium, but because they want to keep a fair share of what they've built. Now, you might think the solution is obvious. Just move to Dubai, declare yourself a UAE resident, and enjoy that zero tax-free life. But this is where most Belgians make their first catastrophic mistake. The Belgian tax authorities don't just wave goodbye when you leave. They have sophisticated systems designed specifically to catch people who think they can outsmart the system with a simple change of address. Picture this scenario. It's something that we've seen constantly. You move to Dubai, get your Emirates ID, even start a UAE company. Smart moves, right? But you keep your boss's apartment just for visits. You maintain your directorship in Belgium because, well, that's where your business and all your relationships are. And every month you fly back for business meetings, which often include dinners with family and also drink, for example, with old friends. At the end of the year, you've spent maybe, let's say, 80 days in Belgium. Surely that makes you a UAE resident, right? Well, that's wrong, because the Belgian authorities will look at your entire situation and say, we see what you're trying to do here, our dear best friend. Despite living overseas most of the year, they'll classify you as a Belgian tax resident, and the result is that you're going to be paying Belgian taxes on your global income while living in Dubai. So you get the worst of both worlds. Expensive living costs, but Belgian tax rates. And this is what I mean when I say the Belgian tax system doesn't mess around. They're not just counting days, they're analyzing your center of life, your economic interest, your family situation. So the conclusion is where you're really hardest. But even if you successfully establish non-resident status, there's another trap waiting for you that most Belgians don't even know that it exists. And that is that Belgium exit tax system can financially destroy unprepared entrepreneurs. Most people discover this exists with all the pleasant surprise or finding out your favorite restaurant closed permanently while you were on vacation. If you own 25% or more of a Belgian company and you become a non-Belgian resident, Belgium imposes a 30% tax on unrealized gains. So guys, think about that for a second. They treat your shares as if you have sold them the day before you left, even though you haven't sold anything. You owe tax on money you've never seen, on a transaction that literally never happened. So you have exactly 1 month after changing your residency to file and pay this tax, and miss this deadline and the penalties can exceed the original tax amount. And we had a client who owned 60% of a consulting company worth 2 million euros, and his potential exit tax bill was 180,000 euros on shares that he never sold to access money he couldn't touch. So we helped him transfer 40% of his shares to family members over 2 years, reducing his stake by 20%, and the result was zero exit tax, 180k saved through proper planning. But even with smart exit tax planning, your Belgian company creates ongoing complication that most people completely underestimate. Your Belgian company doesn't magically become international just because you move to Dubai. It stays Belgian for tax purposes, which creates a web of complications that can trap you for years if you don't do this correctly. And if you're managing the company from abroad, it could become dual resident, creating tax obligations in 2 countries. And you still have director duties under Belgian law, regardless of where you're slipping your morning coffee. So Belgian authorities will investigate whether your company actually operates in Belgium or just maintains a fancy mailbox presence. And if your company deals with related entities in other countries, transfer pricing rules continue to apply with the persistence of a Brussels traffic jam. Successful clients solve this by implementing proper holding structures in tax-friendly jurisdictions, establishing clear management protocols, gradually transitioning operations to new locations, and building genuine substance in their destinating countries. This brings me to the most critical factor in your success: building real substance in your new country. So Belgian authorities excel at spotting fake setups. You can't just move to Dubai and immediately start posting Instagram stories from fancy restaurants while keeping your Brussels apartment and leaving your family in Belgium immediately. You must actually live in your new country. Main residence, significant time spent, genuine community involvement. You can't have a spouse and children in Belgium while claiming Dubai residence. The entire family situation affects your tax status because that is your life, obviously. Build real business relationships. Establish local banking with actual activity. Hire local advisors. Join local business communities. Become a genuine participant in your new country's economy, not just someone with expensive passport stamps. Most people treat international relocation like an extended vacation. That's exactly how you feel. You are gonna feel like that. You need to build genuine roots, create real value in your new location, and make it much more than just a tax optimization strategy. And I can say it is not very bad to live here in another country than in Belgium. Now, let me share the 5 most expensive mistakes that destroyed Belgium exit strategies. Mistake number 1 is an incomplete exit. Keeping your Belgium apartment, maintaining company directorships, or significant Belgium operations. And this compromises your non-resident status faster than rain ruins outdoor plans in Belgium. Mistake number 2 is poor documentation. Not maintaining proper records of days in and out of Belgium. Tax certificates, residence evidence, real evidence. Belgian authorities will demand documented proof with the thoroughness of a custom expectation. Mistake number 3 is timeline errors. Not planning for exit tax deadlines or missing the 1-month filing window. And this turns manageable costs into financial disasters. Mistake number 4 is the do-it-yourself approach. An approach that people really like to try. Also, attempting international tax navigation without any professional help. The complexity makes Belgian tax law look straightforward by comparison. And mistake number 5 is narrow tax focus. Focusing only on personal tax rates while ignoring corporate tax, exit taxes, and any other liabilities that completely destroy your optimization efforts. Each of these mistakes can cost you hundreds of thousands of euros and years of legal complications. But when you avoid them, the results can be transformational. I can tell you that. I see it every day here. Where are all the Belgians entrepreneurs actually relocating? Not every destination works for every situation. We know that. So let me break down your real options. Dubai offers 0 personal income tax and 9% corporate tax on profits over 375,000 dirhams. The UAE has an excellent tax treaty with Belgium, which can eliminate withholding taxes and provide additional protections. So it's perfect for e-commerce trading and digital services, but it requires real substance though. You need genuine business operations and significant personal presence. Cyprus offers 12.5% corporate tax with incredible intellectual intellectual property benefits. You maintain EU access while getting favorable tax treatment. It's becoming increasingly popular with Belgian tech entrepreneurs. And if your business involves software, let's say patents or IP licensing, Cyprus could be transformational. Portugal provides reasonable corporate taxes with specific business incentives. Great lifestyle. Proper time zones as well for European clients. Best for service providers in my opinion, also consultants and content creators who want to stay within the European ecosystems and are willing obviously to pay some taxes. So each destination has specific advantages and also requirements of course. And the key is matching your choice to your business model and also family situation of course and long-term goals. So before I give you your action plan, let me absolutely be clear about legal boundaries. So there's a huge difference between tax avoidance and illegal tax evasion. Legal tax avoidance uses legitimate strategies within the law to minimize taxes. Proper relocation strategy, strategic structures, treaty utilization, all completely legal and of course above board. Illegal tax evasion involves hiding income, lying to authorities and creating fake arrangements without any substance. Belgian authorities will discover these, I can promise you that, and with the inevitability or traffic during Brussels rush hour. At Amifos, we operate exclusively within legal boundaries, of course. We sometimes decline clients even whose expectations don't align with legitimate tax planning. This protects our clients and maintains our highest success rate possible. So your personal action plan starts with calculating your current Belgium tax burden. You need to know exactly what you're escaping from and what it will cost upfront. Research destination options that match your specific business model and also family situation, of course. Don't pick a country with the lowest taxes. Pick the country that makes the most sense for your entire life. Of course, it's not only about money, you're gonna live there as well, so it's important. Understand critical timelines, especially the 1-month exit tax filing window. Belgium rules change and timing can make the difference between success and disaster. Most importantly, get please professional guidance for implementation. This isn't something you want to experiment with. The cost of getting it wrong far exceeds the cost of proper advice up front. I think it's time for a reality check, guys. Every day you delay, you're paying 50% plus taxes when you could avoid potentially be paying single digits. If you're currently paying 200k annually in taxes, that's 1 million over 5 years. Think about it. And even after accounting for exit costs and professional fees, the savings are substantial. Escaping Belgium's tax burden is absolutely possible, guys, but it requires proper planning, genuine commitment to building substance abroad, and professional execution. Don't let Belgium take half your wealth when legal alternatives exist. If you're serious about Belgium exit strategy, visit amifos.com for a free consultation and we will analyze your specific situation and create a roadmap that actually works within legal boundaries. So my question to you is now, what is your biggest concern about leaving Belgium? Exit tax complications or choosing the right destination? Drop a comment below and your questions drive our future content and I will read them all myself and respond personally as well. So if this breakdown helped you understand what you are really gonna face, share it with any other Belgian entrepreneurs or friends that might be trapped in the same situation. I think they're gonna thank you for it later. And remember, the best exit strategy requires proper planning, genuine substance building, and complete legal compliance. So don't let Belgium treat your success as their personal revenue source when legitimate alternatives exist for smart planning. Of course, guys, don't forget, stay smart, stay legal, and let's get you out of tax hell, and I'll see you in the next video.